Non-banking financial companies and private equity funds are lending to real estate developers at a frantic pace, with refinancing of loans making up a bulk of such transactions. This comes at a time when the property markets remain in the grip of a slowdown and project cash flows stay uncertain. Property sales have remained muted for nearly 2 years now, with the National Capital Region and Mumbai still not showing signs of a pickup anytime soon. But that hasn't deterred NBFCs and PE investors from funding realty firms. Analysts and domestic investors are worried that if sales don't pick up in the next 6 to 9 months and these much-awaited cash flows don't come in, it may get increasingly difficult for developers to repay these loans, resulting in delays and defaults. Around 65 to 70% of domestic investments in real estate, both from NBFCs and private equity funds, are mainly refinancing transactions today. In a debt-centric market, investors have given money in anticipation that sales will return, said Shashank Jain, partner, Transaction Services, PricewaterhouseCoopers, India. Real estate needs capital to replace earlier debt as investors press for exits. They also need money for last leg financing to complete projects, as startup capital to kickstart projects and to acquire distressed assets. While competition between NBFCs and PE funds get aggressive, some PE funds are slowing down capital deployment, weighing in on the high risks involved in lending to the sector. Between January and March this year, private equity investments in real estate jumped from $527 million compared with $100 million in the first 3 months of 2014, according to VCC Edge, which tracks investments. 2014 saw a total of $2.264 billion of private equity lending to the sector. Most domestic investors follow the NCD route, a popular debt instrument which typically cannot be converted to stock and offers yield of 14 to 20%. We are a bit more cautious as a fund and evaluate deals more conservatively. There is a bit of churn happening in the real estate sector, with a few developers doing joint development deals and some who are exploring exit options from projects, said Rahul Rai, head of the real estate investment business at ICICI Prudential Asset Management Company Limited. Refinancing transactions are not new, but only in recent months have they started to dominate the real estate scene.